I'm Corbett Wall with DV Auction, here with your cattle market summary for the week ending May the 20th. Brought to you in part by the American Simmental Association, reminding you that the most durable and fertile female is a crossbred. See what Sim Genetics can do for you. Go to simmental.org. Boy, the feedlots really surrendered this past week, and it's just hard to believe how easy they gave up. It's almost like they were apologetic about the previous week where they'd gained a lot of money in the cash market there, and just maybe like the Dallas Cowboys, knowing that they're kind of outmatched, just laying down and forfeiting the game before they even got into the trenches to start playing for it. But on Wednesday they gave up a couple dollars in the cash market and started trading 131 to 132. Even though the board really hadn't been down that much, box beef was still going up, everything was looking pretty good. And then we come in there on Thursday and all your publicly traded markets were down pretty hard because it become apparent that we're going to be in for a interest rate hike now, if only for 1/4%, but that does kind of lead to interest starting to go the other way after it's been going down and it's staying around that zero for so long. But that was hard on all the markets, and so they go ahead and give up another $1 or $2 late in the week. But your live cattle futures on June contract ended the week at 121.05, which was down 237 for the week, and really not that bad, and not as much as what the cash market was down. Your feeder cattle futures, the August contract ended the week at 147.92, which was actually up $1.67 for the week, and there's really no reason for your feeder cattle to act more positive than the fat cattle. But it's just like I've said several times, you've got a lot of competition in your feeder cattle market. You have very little competition in your live cattle market, and as long as these cattle feeders, besides the packer-owned cattle, which has been looked into the last week or so here, but these independent guys that are not in cahoots with a packer, as long as they have to buy feeder cattle in a competitive market and sell fat cattle in a non-competitive market, this cattle feeding deal is going to be a very poor investment, and it's one of the worst investments you can get into. If you talk to anybody that's been doing it very long, most of the time their risk management strategies are the only way that they can make any money. And if you've got a good broker, somebody that knows what they're doing, if you're in the cash market, you can usually get a strategy that will help you out. You look at the feedlots this week, and we say there was no reason for them to give up. Well, the reason that they do give up is because they're all hedged, and they can't resist that $10 basis. And so they want to sell those cattle as quick as they can while the board's down so hard, and there's that big basis right there which they basically get to put in their pocket, which ultimately adds on to what they received for their fat cattle. But it works the market lower. On top of that, a lot of the guys sold their cattle this week not to be picked up for 2 to 3 weeks or a month out front, which is going to continue to work on the market and take away the leverage, any trading leverage that they had. But like we said, the market fell through the week. On Wednesday they traded cattle 131 to 132. By the time we got to late week, it was at 129, which was roughly $3 in the bulk lower than what the previous week's trade was. Your dress trade was 204 to 206 late, which was $4 to $6 lower than the previous week. But we did see some more positive fundamental information, with actual dress steer weights dropping again 6 pounds this week, and they've been really dropping, and they're finally lighter than they were this time a year ago, which is a very positive fundamental factor. But an average dress steer weight's now down to 862, and since the beginning of the year, that's the fastest these carcass weights have dropped since 2007. It's a significant drop, and these feedlots are a whole lot more current than they've been for a long time. But if they're not taking advantage of that currentness, and by current I mean that they don't have a lot of market-ready cattle. They might have the same number of cattle in the yard, but there's not as many cattle on the show list. And if they're current like that, and they've been digging in and getting some cattle at a lighter weight, and we also see that because the number of cattle or percentage of the fat cattle that are slaughtered every week, the amount of those that are grade and choice is down big. And so we know that they don't have as many days on them, and we know they're not as heavy. This choice select spread continues to widen, and box beef, it started to tail off there at the very end of the week. But if you look at the week's average sales on your choice carcasses, they averaged $225.72, which was up $12.72 from the previous week's average. And your select carcasses at $210.38, which is a more than $15 spread, and you don't usually see that on choice select spreads. But your select boxes were up $8.66 for the week. But your cattle on feed come out on Friday very bearish, and we'll see that Monday through Wednesday this week could be kind of rough in your cash feeder markets because of all the market position was let loose by the feedlots and their fat cattle trade last week. Just a lot of things working against things. We're starting to get closer to summer. We know that this spring jump here is about to kind of tail off, but this cattle on feed report was pretty darn bearish, and that is going to hit the board this week early, and it'll hit the cash markets too. But your May 1st inventories, your actuals come out at 101. Your average guess was slightly under that at 100. So that's just a little bit on the bearish side. But your placements, the average of the analyst guess, well, we're having placements less than the same time a year ago at 98%. The actuals come in at 107. Wow, missed that huge. And that, a 9% miss in that to the wrong side, that's very, very bearish. And even your marketings were off on the bearish side too. The actuals come in at 101, and the average guess was at 102. So everything was on the wrong side of where the cattle people want it to be. Cash feeder cattle, we were still going up because a lot of the sale barns didn't get to experience the full charge of last week's higher market or the previous week's higher market. So through this past week, calves were steady to $5 higher. A lot of your feeder cattle steady to $3 higher, and it was just trying to catch up with the previous week's gains because not everybody has a good run every week this time of year. But we did see things start to peter out there towards the end of the week, but still some pretty impressive prices there. But your CME cash feeder cattle index on Friday's release, which was through Thursday sales, was at 148.53. Your real-time index on Cattle Market Central and Beef Market Central is current all the way through Saturday's sales, and is a little over $1, close to $1.50 lower than that at 147.19. So we know that CME cash feeder cattle index is going to be coming down some more, with lower prices paid in the sale barns on Friday, and then we know that coming this week they're going to be lower again too. But on Friday at the Bloomington, Wisconsin Livestock Exchange, just after lunch there, they had a load of steers that weighed 937 at 140.5. We probably won't see that for a while, but that was undoubtedly a farmer feeder that was looking to invest there. And then earlier in the week on a calf run at Winter Livestock, Dodge City, Kansas on Wednesday, about 3 o'clock in the afternoon, they sold over 50 head of 488-pound steers at $1.89. And that's probably the closest we'll see to $2 for a long time now. But relocating here from Missouri back down to Texas, but we'll talk to you on Wednesday.